Well, thank you everyone that's joining today for what is the sixth event. Wow. Is that? Let me resume share. Can you see my screen, George?
Yeah, all good.
Great. For what is the sixth event in this series, which seems quite we're quite deep into it. This is our DeFi Club initiative. It's teaching you about DeFi from the ground up. For those, perhaps some of you joining kind of learning about blockchain for the first time, and some of you a little bit more experienced with blockchain who want to kind of deep dive into DeFi and hear from some of the biggest players in the space. This is the perfect initiative for you. We are in a 10-week cross-university educational initiative. We have done, I'm going to tell you about the events we've done so far in a second. But it's designed for anyone. So whether you're a developer, non-developer, not just exclusively these four backgrounds, it's designed for anyone. And the great thing is it is online, everything is recorded. So if you want to go back and watch any events that have happened before and absorb the content in your own time, please feel absolutely free. All of that is online. Two words about Encode, or a few words about Encode before we get going. We aim to educate, support, and back the next generation of talent coming into the space. We do this across 6 different things, from workshops to AMAs to hackathons, accelerators to investing and for recruitment. We really try and have you covered if you're trying to get involved into the blockchain space. And we do this through our fantastic university community across 75 different universities. And here we have representatives from these universities and students here today. And I'm very pleased to say this list is not exhaustive with some of the partners we have today aren't on here, but a ever-growing outdated selection of great partners who support what we do. And in particular, for this series, we have 4 amazing partners, Arve, Market Cap, Sushi, and Vega, who supported this event and been the kind of the teachers of a lot of the content. For the first time, we have actually Sushi joining us today, which is fantastic. It's going to give you a deep dive there. The Discord is here. Discord is a place for discussion, for question asking, just keeping up to date with the Encode community. George will make sure there's a link on there, but do have a look there. Everything we do kind of goes on Discord first and foremost. Let me just add that person in. As I said, we're about 6 events in, or this is the 6th event. We have an intro event. We then do a DeFi product stack event, an AMA with Arthur Brightman, the founder of Tezos. Last week we had an AMA with Hugh Karp. The content for that should go online, I reckon, this weekend or Monday. The AMAs take a little bit longer just to make sure that we sanity check transcripts and etc. He was the founder of Nexus Mutual, the biggest kind of insurance platform in the space. Today is the first Building on DeFi event, which is really kind of a more technical, if you are a developer, how would you actually go about literally building stuff? Sarah says I speak too fast. I will try and slow down. I'm sorry. Today is the first kind of Building on DeFi event, which is for more technical folk, I guess, who want to start building their first applications in blockchain. And even if you want the best developer in the world, or maybe you're a beginner to the space, I'm going to teach you some. I'm going to, in my little presentation, give you some of the building blocks to get started, really. We help everyone from the most beginner type developers to the very experienced looking to kind of build companies. Just as a kind of 2 minutes on kind of, if this is your first event, just a 2 minutes on what's happened so far. So we've discussed what DeFi kind of is. We explained that DeFi is a kind of reaction, or you can't really understand DeFi without understanding TradFi, which is how finance works currently. And in general, all of this can be kind of surmised by lots of these things on screen, everything from lending to borrowing to currency to money to exchanges to trading to tokenization. It all comes back to money fundamentally, and that we're on the basis that blockchain offers a really cool way to do digital money, or the only real way to do proper digital money with the principles we kind of care about. This idea of being decentralized, you don't trust a central party. It's open and broadly open source. It's programmable. It's immutable. All these different things without rehashing specifics we went to in previous event, is you can start, if you have this idea of kind of crypto money, digital money, you can start building code-based programmable things on top of that. And we're going to explore some of these things today and give some demos. We have Sushi and Vega speaking today, and I'm going to talk a few things in general about how you would go about building a DeFi application. In general, this all comes back to the fact, and the kind of takeaway thing today is you have these things called smart contracts, and smart contracts allow you to kind of write code that fundamentally money that can't be changed. This is the kind of the contractual kind of aspect of it. Once you've kind of written a smart contract, it's very difficult. There are ways to change it or to kind of fix any mistakes, but in general, as a general rule, these are hard to change. These are systems that once they're out there, you can't really stop without doing some kind of taking quite major action. This is good if you're going to deal with the money. You want kind of code that is law, that code is fairly absolute, and that you can trust it, and it will run without kind of any kind of middleman stepping in and messing the system up. But smart contracts effectively are the platform in which that you use to kind of build DApps, decentralized applications, kind of DeFi, decentralized finance applications within blockchain, and you write them as smart contracts. And we're going to talk through kind of some of the aspects of this today. In general, the point is that crypto reimagines finance from scratch based on this idea of programmable money, money where you can directly code with it, code on it, do cool things. If any of you have ever built kind of any app developers out there and ever done anything involving money, just getting paid or making sure that when a payment is received, it gets split and some gets set there and some gets sent there, this is incredibly hard, incredibly slow. So if you start from the assumption that you can have fairly instantaneous kind of money transfers and that you can split money and have money move in fast and kind of quick ways, you can start doing cool things. And then you add the fact that we can start coding applications linked on the flows of money. This becomes very cool and opens up a whole entire new world. So what's it mean to build on DeFi? It does start with being able to code. And I know some of you here might not necessarily yet be able to code, but the good thing is it's not that hard. And we actually have some dedicated, let's hope my screen keeps sharing now. Can you, George, is my screen nice and visible?
Yeah, I can see that.
So we do tons and tons of events on introductions to blockchain and coding. We did one a few weeks ago. In general, if you are new to coding, let us know. And we'll kind of point you to one of our events. And there's so much content online and on the website. If you head over to Encode.club, you can find a ton of stuff. My laptop is so slow when I try and do this stuff, but let's see if it will load. Yeah, there's tons of stuff here that you can find, and also on our YouTube and Medium. So if you are new to coding, either go and look for yourself on our website, or talk to us, talk to me, talk to George, and we'll point you to some resources. The other kind of big thing happening soon at Encode is we are launching for the first time. Is this going to work? Yeah, Encode Academy. And Encode Academy is a dedicated kind of coder bootcamp that will be starting, I think, around June. This is, if you want to kind of, you want to be taught properly about how to code, this is the thing to do. So if you don't want to do it just on your own, keep a watch out for that, because that's a big new initiative coming in the next few weeks and months. The next best place to go is hackathons, and hackathons are amazing. And this program is purely an educational initiative, putting on events, teaching about stuff, bringing some great speakers in. But hackathons are the best place to go to kind of actually first start building stuff. And in general, what hackathons allow you to do is it's a platform to learn in a fixed time where there's tons of support. You can meet like-minded people, which could eventually be your co-founders or just buddies or people you code with, and you get to try things. And the best bit is you get rewarded, you get paid to do it. And we do plenty of hackathons in Encode, though please do not think that Encode are the only hackathons you could do. Hack the System is our current hackathon that's going on. We also have Hack Africa starting soon, which is our kind of Africa-focused hackathon that starts in kind of May and runs through to June. And we have many, many others going on. So please do keep a lookout. But hackathons, once you've learned these skills, hackathons are the next best place to go if you're going to try and build something from anywhere from a very simple application to something quite hard and quite exciting. And we'll look into some projects that have actually come out of hackathons that have gone to do great things shortly. Let's write this load. The next step, I say, is to try and build your own thing. This is either in a hackathon or after a hackathon. And the best thing about DeFi is that it's composable. All the parts, all the protocols you see, you can interact with and you can build with and build on top of it. It's money Lego. And you can take amalgamations, combinations of different protocols and build your own new thing. Or you can build kind of your own version of it. I'm sure Omakase will talk about the sushi journey, but the sushi journey is in part one where it's like we think we can do kind of decentralized exchange better than the kind of incumbent, which was Uniswap, and we have a different approach to it. And because code is usually open source, we can go and start kind of see what other people have done, do our version of it, and try and do things better. And I love this about DeFi, and it's such a fantastic thing that the whole system is primed for innovation. Partly because of speculation, but partly because people like building cool things, and you've got a lot of ready-made people who are ready to kind of get involved. This is the great thing about DeFi, it's composable. You can start playing with it from day one, build your own thing. And I want to kind of show you now some examples of projects and talk about their journeys before we go into kind of Sushi and Vega to talk about actually the nitty-gritty of how you would build with Sushi, how would you build with Vega. So the first one I want to talk about is 0xMons. This was a NFT generated, these are like basic Pokemon generated by kind of on the blockchain as NFTs. NFTs we haven't actually talked about a lot in this series, but are non-fungible tokens. So a token that is unique. It's not fungible. You can't. There's not many copies of them out there. It is a unique token, and this lends itself very much to art because art tends to be unique. And 0xMons actually used something called generative adversarial networks to generate little kind of basically cartoons, and they pick the best ones or vote for the best ones that look like monsters, and they kind of build stuff around them. So this is I should say in general most applications in DeFi are built around Ethereum, but they don't have to be. We heard from Tezos last week, for instance, and you'd actually build DeFi, but this is all the ones I'm going to mention today were built on Ethereum, just because that's the way they've gone for. But these guys, this is a student from the University of California, San Diego. He entered our hackathon, he won it, and he actually launched a token. And we talked about it 2 weeks ago. One of the fantastic innovations of DeFi is, or byproducts of DeFi, however you may look at it, is very easy liquidity and very easy fundraising. If a project has if you think a project has product market fit, and they have a token, and they have a community around it, and you can do some really cool things. This is a good example of if you're into art, this is the sort of thing you might be interested in. The next one is called Euler XYZ. The website isn't as good as 0xMons. This is another winner of one of our hackathons, and they have raised a lot of money, and they are a permissionless lending platform. So what they do, to talk about composability, is they allow you to borrow or lend out any token. And without going too deep into the nitty-gritty, what they actually do is they use the kind of data from decentralized exchanges to work out what the price of something is. They use that to kind of generate a price and an interest rate, and they then say who wants to kind of lend it out, who wants to borrow it. We talked about it before, but lending is so important in crypto because lending allows you to go short, to bet against something. It allows you to temporarily borrow a token for the purpose you might need within DeFi without having to necessarily own it, which means in some cases you don't have to sell tokens you kind of a long-term kind of bullish on in order to engage with different parts of the DeFi system. There's many kind of cool reasons why you might want to kind of borrow or lend in crypto, and it's certainly a kind of essential part. If you think of normal everyday finance, this is an everyday part of it. Having this for every token in crypto is important. So if anyone wants to kind of look at them, they're very cool and doing good things. Another hackathon product, Reflex Labs. They came third, ironically, last year. Again, very successful, raised a lot of money, and they're a stable coin. So stable coins we've talked about before are coins that kind of maintain a stable value rather than kind of if you were to buy and sell. If you were to buy and sell stuff in Bitcoin or Ethereum, like the value changes 20% a day. Sometimes kind of 50%, 100% a week, which is not kind of great if you want to use it as a kind of means of exchange. So Reflexer is a stable coin, and they use they do in a very cool way, quite frankly, without going into the too deep about it. So you could build something like a stablecoin. And another kind of example of this is Float Protocol, where this is actually their farm, which maybe we can talk about that for a second. So Float Protocol is another stablecoin different to Reflex. So instead of being kind of aimed to be fixed to one, rather than, I should say this carefully, Float aims to be far more floating and to change value quite a lot over time, whereas Reflex tries to stay reasonably close to its target price in the long term. Without getting into too nitty gritty. Float is therefore tries to protect purchasing power much more, whereas Reflex tries to protect the value of its basic initial target price, which is just over $3. The Float also an anonymous team. You might notice we have a fantastic deep fake from Omakase. They've gone for a pseudo anonymous look, and I think this is very important in crypto to take attention away from the individual. You want the tech to shine, and so they were in the hackathon. They also came third. They are researchers by kind of trade, by background, and in order to distribute their token initially, which is called Bank, they decided to do a kind of distribution where they just said anyone who was an active governance participant in another protocol can they if they would like, they can stake the money and get this bank token pretty much for free. Yes, for free. And this was a way to get lots of people who they knew were active, kind of engaged DeFi participants into their system and to get involved. And that was broadly very successful. They also, just as a kind of cool thing, a nice cool synergy, I know that they are using, I'm sure Omakase will talk about this slightly later, in terms for their liquidity pools, the pools to provide liquidity for their kind of token, they're using Sushi. And all the cool things kind of Sushi are using that. This is a very good example of composability. Something like Float can't exist unless there are good, deep liquidity for its tokens, and Sushi provides that. So that's kind of another one to look into. So here's 4 examples. All of these guys were, I think pretty much all of them were students who kind of just got deep into the space and after a year built something amazing. Look where they are now. They're all kind of doing extremely well, have projects worth a lot of money, and having a whale of time. I think this is inspiration to all of you who are looking to kind of get involved in DeFi, maybe build something for the first time, to kind of get involved. That's what I want to say for now. This is just a kind of general overview of how you could get involved in DeFi. Again, if you're interested in the kind of technical side, learning to code, let me know, or go and join one of our intro to blockchain, technical intro to blockchain events. But now I want to hand over to our 2 speakers today. We have Sushi and Vega to talk about how, with their platforms in mind, how you would build stuff. This is the first time kind of Sushi have spoken in this series. They joined us last week, which is fantastic, and we're so pleased to have them involved. They're also going to be sponsoring our Hack Africa event, so you can get involved and build on Sushi or build with Sushi. But I'm going to hand over to Omakase to explain more and tell you everything you need to know about Sushi. So thank you very much, and handing over to you.
Thanks, Anthony. Happy to be here and happy to support Encode. Today, I'm going to briefly run over what Sushi is, what kind of, where Sushi fits in this DeFi ecosystem, as you guys have probably reviewed in the past few sessions, and, some opportunities for building on Sushi, and why, Sushi is radically different, in my opinion, than most protocols out there in terms of how we build things, how we interact with each other. So let me share screen. Cool. Can you guys see this?
Mm-hmm.
Great.
All good.
Okay, and I'll just keep this chat open here. Okay. So, Sushi started around last August. I guess everybody chose to be pseudo-anonymous because, and I guess I can explain deeper as to why pseudo-anonymity is somewhat of a plus in this space, because it really allows, as Anthony says, to focus on the work that's being done without, any prejudice or any, preconceived notions of, what people are building. It's just, you have builders and that's it. So to give you a little background, I was the first core developer that joined Sushi after the chef Nomi Sega. And to be honest with you, everything we do at Sushi is decentralized. There's core team members I've never met, in person or even face to face. And this allows for, a hyper focus on, building and, just generating output no matter your age, no matter where you come from, etc. And I think that's the beauty of, this goal to democratize, software development. Our team is comprised, and we also have, a huge community that's comprised of people from all over the world. So I guess you guys have probably already reviewed this, but in decentralized finance, I think it's a response to market conditions. So capital markets are largely driven by yield. I like to show this picture a lot as kind of a joke, right? Because you can earn 0.5% APY on a high interest yield, right? But for decentralized finance, that's, quite low. So what happened in the DeFi space is that you started to have people called yield farmers. So people who like sought out yield from different DeFi protocols. From the term farmer, you start to have, something like Yam, which was the first, food token, and then you have Sushi, and then you have other food tokens. So I guess, what is a food token? I guess we can basically summarize it as the understanding of, where does yield come from in the DeFi space? We talk about yield, we talk about yield farming a lot. So the first place it comes from is network tokens. Maybe in the literature, you would have heard them as governance tokens. I like to call them network tokens because these tokens are, starting with YAM, right? The token basically incentivizes users to use the protocol early, and they're rewarded for using the protocol early. So it allows you to bootstrap network effects. So this is what I describe as network tokens. The second methodology, that can be deployed to basically generate yield is protocol usage. So we see these in different, protocols. You provide liquidity, if swaps are made on liquidity, those protocols pass on a fee to the liquidity providers. So the more people who use that protocol, the more fees are passed on to the participants. And, the more fees that are passed on to the participants, the higher the yield. And then the third item is basically what we would call leverage demand. I think this is a more, a little bit more complicated topic regarding, contango and, the bull bias and in crypto during this bull market. And so there's like a long bias, and basically, long story short, there's a huge demand for leverage. Everybody wants to take leverage positions because there's a bias towards crypto going long on crypto. So leverage demand is basically the underlying derivative is usually has a higher premium than the asset price. And this is basically captured in a lot of different ways. The first one is, lending protocols, and, you have all sorts of other derivatives. So basically, these are the three places that yield come from. And this is kind of how you have to view Sushi in order to understand, why we started in this space and where we fit in this space. So, and this space is, as I, started off saying, is largely driven by yield, right? We have, traditional LIBOR interest rates are, if you can get 1% above a LIBOR interest rate, that's generally considered amazing in the traditional finance space. But as you see with Sushi and other protocols, we're starting to have things like network tokens, right? Protocol usage and leverage demand. And, just off the bat, some of our network tokens and, our farming pairs generate 40% APY. Our protocol usage, can generate, 13% double-digit APYs. And these are incredible for institutional investors, trading desk, retail investors. And, in DeFi, we like to colloquially call people who chase yields, these enormous yields, degens. So one of the effects of basically having, a network token is that we have to, well, when we released Sushi, we really believe that there's power through decentralization. So the Sushi token actually serves two purposes at the moment. So the first purpose is governance, and the second purpose is dividends. So the first purpose, we have decentralization through governance, voting, community proposals, and this garners some competitive advantages through having access to large talent pools, access to breakneck innovation. So as Anthony introduced us, Sushi is kind of different in a way where we're not a centralized organization. We're completely decentralized. Anybody who basically holds Sushi can vote, can create a proposal, can build anything they want on top of all of our open source repositories. And this allows us to draw from the power of network effects, right? And this is why I've called Sushi a network token, because what we're essentially doing is bootstrapping network effects. And this allows us to compete against more traditional centralized players that have hyper focus and probably don't innovate as quickly, right? So how does someone participate in Sushi governance? It's quite simple, right? As a network token, all we require is someone to provide liquidity, and then they can stake that liquidity into a farm to start earning sushi, and then they can deposit that sushi for X Sushi. And X Sushi is essentially our governance token, and also produces dividends as well. So the more sushi you stake, the more X Sushi you'll have, and that's and that counts towards your voting power for all of our proposals. And I guess I would say, since DeFi is so new and like nobody really knows how governance and action should play out, I think Sushi has undeniably one of the most active communities in terms of governance. We're active on Discord. That's usually where people are discussing ideas, asking for help, right? They say, hey, I have an idea to build something. I need someone to help me build it, and then let's write a proposal together. Proposals go on our forum. That's where people can start to take basically a community temperature check, and people can upvote, downvote. Once these proposals gain enough momentum, they go on Snapshot, and that's when you can use your X Sushi as an X Sushi holder to vote for a proposal. I think a recent proposal that that has been taken the past 6 months has been SIMP3, which is basically our vesting proposal. And this was actually led by a very active community member, Luffy, and he saw that whole process end to end over 6 months. And I think that's like an incredible testament to like how anybody can participate in Sushi. And anyone can have an idea, and anyone can basically roll out a solution that I would say SIMP3 generated around $800 million worth of wealth, right, for all of our liquidity providers. And that's a huge understatement to the power of network effects and having an active community that can actively make good proposals and have those proposals bubble into actionable items. So that's basically a slight overview of how our governance works. And as I said, since we're a decentralized protocol, we have multiple interfaces that are created by the community. So anyone from Encode or anyone who's willing to dabble can start to build any kind of interface. So we have many different interfaces by being completely decentralized. And I guess the second section I'm going to talk about is like where Sushi is and where Sushi is going and the opportunities for people to build things. And then the third thing I'll touch about is how we will continue to build, and some ideas for you guys to even jump in. So the first is as Anthony introduced, we started off as an AMM, and there's an automated market maker, so basically like an exchange. And as I've said, right, yield in DeFi comes from 3 major places: network tokens, protocol usage, and the demand for leverage. So when we started off, we had yield, and we only had 2 elements of that, which is network tokens and protocol usage. And I think that the combination or the joining of these 2 yield mechanisms actually was the first innovation of Sushi. We see lots of exchanges. We actually see lots of decentralized exchanges as well. And they largely focus only on protocol usage. They only offer this type of yield. But Sushi was the first AMM to offer both, right? Network tokens, protocol usage. And I'll kind of explain why this is necessary under an AMM. So we also have dividends, right? We have swap, liquidity, and transfers. And due to the dynamic nature of our community, it's only natural that people want to expand horizontally and vertically, right? Our community is super active. And, our community is super active and, wants to build vertically, horizontally in all directions. And here's basically where we're going or where we kind of are today. So, we can expand horizontally on the network tokens by generating, a token creation, token discovery, incentivization, maturization. And, every single one of these, I guess, action items or, products are all community built, right? And, could use, everyone here to join and, develop these mechanisms as well and, help the community. You don't even need to be technical, right? All of these, each horizontal product or, vertical item needs support on all different levels. So essentially where Sushi is going is you kind of have to go back and understand, where does yield come from in DeFi? And, as a decentralized community, will naturally expand to all aspects of yield. So we have network tokens, expand horizontally there, protocol usage, expand horizontally there, leverage demand, lending markets, we're starting to expand horizontally there as well, swap liquidity, limit orders, and low fees and also transfers. So transfers are related to, composability, right? And that, Anthony talked about. Low fees is related to, there's a lot of pressure right now on Ethereum to have lower fees, so to allow more users to enter without such a high, requisite for high fees. So this can be addressed through, our multi-chain expansion and also our vault system. So generally, I guess this overview is kind of, sometimes it's really easy to get like lost in, you can't tell the trees from the forest, right? So generally Sushi as a protocol is expanding vertically and horizontally through all these different dimensions. And we'll start to see, further initiatives. And once these things all start together, coming together, we'll start to see a holistic trading platform, right? So we're no longer just an AMM. We're no longer just, swap and provide liquidity. We're swap, provide liquidity, lending markets, right? Limit orders, low fees, transfers, dividends, etc., all wrapped into one. So this is kind of a holistic view of Sushi. And, as Anthony said, in order to get started in DeFi, I wholly recommend, right, that everyone, just dig into our GitHub repositories. From, as a personal anecdote, how I got started in DeFi was just like looking through code. There's a lot of open source code out there, a lot of high quality code. And, if you're a front-end developer, if you want to be a Solidity developer, there's demand on all aspects in DeFi. Right now, I would say a huge pain point in DeFi is actually user interface, user experience. So there's lots of opportunities for people to, if they have front-end skills, if they're, well-versed in JavaScript, TypeScript, GraphQL, these are pretty standard, front-end technologies. You can get started in DeFi almost immediately, as long as, you look through the repos and, there's some pointers. So in the Sushi ecosystem, right, we have Sushi Swap, which are our Sushi Swap smart contracts. We have Sushi Interface, which is our interface that has different branches and also lots of different forks to build out what I described as this holistic trading platform. We have Bento Box, which is our vault system, and that I'll explain later. If you're starting to poke around into the Sushi ecosystem today, I would say take a look at Sushi Data, and Sushi Data is basically almost all the queries you need to query the protocol. I would highly recommend, right, if it's, if you're dipping your toes into DeFi, Sushi data and analytics are perfect places to start. Generating, complex analytical dashboards. These are always a plus, and they're always in high demand because, quite frankly, in the DeFi space, yes, it's open source, it's open access, right? You can query the blockchain, you can query essentially anything you need, but digesting that data is usually difficult, right? And digesting that data in a way that you'd like is also, a personalized task. So definitely recommend people to check out Sushi data. If you're more well-versed in, GraphQL Web3, Sushi Swap Analytics is probably a good place to look at as well as Sushi Swap Subgraph. So basically the skills you need to enter, DeFi as a developer these days is JavaScript, TypeScript, GraphQL, Web3, Solidity, and Hardhat is basically a platform that you can use for Solidity, and React, and basically an understanding of utility CSS. So I would definitely recommend everyone to go comb through our repos when they have the time, see how things are structured, and you'll actually start to see how kind of easy it is to get involved in DeFi. And as I said, right, we're building lots of products. Our community is decentralized, building different things horizontally and vertically, right? We're coming out with Cache, which is our lending system, Bento Box, which is our vaults, Mirin, which is our liquidity provision system, Miso, which is our token launchpad, Onsen, which is our incentivized token rewards mechanisms, MasterChef V2 for joint rewards, and we also have XSushi and Sushi Bar as basically the dividend mechanism for our token. So there's lots of things people can get involved in. And that's, I guess, a brief overview of like how all these things fit into this ecosystem. And I'll just run through each one of them really quickly and show you guys some examples of how you guys can, start building and, start participating. So the first one, this first horizontal that we'll focus on is basically this token supply chain, how tokens are created, and how tokens are discovered, how they're incentivized. So we have our onsen mechanism, which is, leveraging Sushi rewards for gamification, and, it offsets impermanent loss. What is impermanent loss? I'll kind of explain later why that's important. And so for onsen, if you come kind of from, a gaming background, right, this is a great place to start to participate, because onsen gamification is, how do we use the Sushi rewards that are being, the Sushi rewards that are, following our emission schedule? How can you use those Sushi rewards to incentivize, interesting behaviors, right? How do you incentivize liquidity providers to deepen certain pools that have the largest volume, right? How do you incentivize them to reduce pools with lower volume? And, onsen, is somewhat of a new product. And as we expand, we can see that onsen can be used to, generate all sorts of different kinds of opportunities, incentivization opportunities, such as volume distribution from, wallets or, second, third parties. We can also see, there can also be the opportunity for some kind of gas rebate for, if you're a high volume trader on the Sushi Swap network. So onsen is quite flexible in the way that, we have an emission rate of, a set amount of sushi per block, and how you want to take that sushi to incentivize good or de-incentivize bad behaviors is actually something really interesting to look at, and something that, is always welcome to proposals. So actually, one of the earlier proposals I talked about was this vesting proposal. So this proposal actually said that, hey, as a liquidity provider, it's actually better if we hold on to our sushi tokens and we don't sell them immediately to cover our impermanent loss. So what started 6 months ago was everyone held their 2/3 of the rewards of sushi was essentially locked up. And, as that lockup went longer, sushi was allowed to accrue value. So, all in all, $800 million worth of wealth was created for our liquidity providers from this one proposal, right, to shape the basically sushi rewards and how they are distributed. now we can talk about a little bit about our dividends mechanism and like xSushi and how that all works. So basically, liquidity providers, they always run the risk of impermanent loss. So impermanent loss is basically when you supplied liquidity to a pair, it's important to always watch, the pair's, I guess, exchange rate since your entry price. And any change in that exchange rate will influence some type of impermanent loss. And so how Sushi started to address this problem earlier on was just by creating these farms where if you were already a liquidity provider, you could stake your liquidity provision tokens, and this is part of composability, right, to offset impermanent loss. So right now, we can see a chart that shows the impermanent loss or actually impermanent gain for our WBTC ETH Ethereum pool. So basically, if you're a liquidity provider, you have WBTC, you have some ETH, and you say, hey, I want to earn some yield by supplying the two. You can enter into this pool, and the total value of your tokens actually recently would have incurred an impermanent gain of around 0.8%. But there are some times, right, where you see on this graph that it could be impermanent loss, where you're actually, due to the shifting compositions of the tokens of the pool, you're actually losing a little bit compared to if you just had held the WBTC and ETH directly. So Sushi rewards offset this impermanent loss because essentially what Sushi is doing is, you have impermanent loss and then you have plus 0.25% of the swapped fees for this LP. So you get the fees to offset impermanent, try to offset some of this impermanent loss. And then you also have the Sushi rewards. And then if you stake that Sushi for xSushi, you also get 0.5% of all swaps from all of our chains. And this is actually quite interesting because it allows you to basically smooth what we call the liquidity provision curve. So there's a curve that's involved where you can basically estimate like for what price difference at what price difference you'll incur a certain amount of impermanent loss. And we smooth this curve drastically by just giving people Sushi as rewards and then allowing them to stake that xSushi so they can gain exposure to all pairs across all Sushi swap across all chains. So I would say this is somewhat innovative in this space to offset impermanent loss in this way. There are different mechanisms that people in different protocols are working on. And so, you can stake your Sushi at the Sushi bar to receive 0.5% swap fees in the form of xSushi. And it smooths the liquidity provision curve and it keeps our incentives aligned with our community, because basically when you're proposing things in the Sushi swap community, proposing new features, etc., people are always thinking about how can I direct fees back to the Sushi bar. So for example, our lending mechanisms that are coming out, our token incentivization mechanisms that are coming out, all direct fees back to the Sushi bar. So anybody who's just holding xSushi will basically receive dividends for all the protocol usage, right? And this goes back to the yield fundamentals that I spoke about. There are 3 fundamental yields in DeFi: network tokens, protocol usage, and the demand for leverage. And it's quite interesting because network tokens can be combined with protocol usage, can be combined with the demand for leverage, and this can have a pinwheel effect in increasing the yield on a protocol level. So this is actually the reason why people should hold Sushi and why Sushi has kind of a base value. And eventually, you can see that in all of our product initiatives. We're always thinking of ways to expand volume, to expand the protocol usage part of the yield, to offer xSushi holders higher revenue. And one way to do this that we're starting to do is go to other chains. So there's lots of different chains that are EVM compatible. So if you can deploy a smart contract in Ethereum, you should be able to deploy these on these chains as well. And some of these chains are optimized in different ways, lower gas fees, higher transaction times. Not all of these chains are, as widely used as Ethereum, but, there might be communities on these different chains that will start to grow out of this necessity for lower fees, faster transaction times. And, Sushi is at the forefront to capture the value from all these chains and, bring that value all the way back to our ex-Sushi holders. And, all the fees from all the different chains, Phantom, Binance, Smart Chain, Avalanche, etc. We're currently on 15 different chains. All these fees go back to our mainnet, ex-Sushi holders. So that's just kind of an interesting tidbit. And then I guess our newest product is lending. And this completes basically this trifecta of yield in the DeFi space. And actually, this is somewhere that people can start building right now on BentoBox and on Kashi. So BentoBox is, an optimized gas vault, and Kashi is, isolated lending markets platform. So one way to think about BentoBox is that, it's a dApp. On Ethereum, there are dApps, and BentoBox can have mini dApps inside the larger dApp. So Kashi is like a mini dApp inside this larger dApp. So what does that mean for the user? That means, once they approve BentoBox once, right, or they approve any token in BentoBox once, they never have to approve again. And this actually saves users a lot of gas fees, and saves users tons of gas fees, and allows for less friction and more optimization in lots of these areas that currently are very, very gas intensive. And I'll walk through a couple examples, and I'll also walk through how you guys can start building on BentoBox and Kashi. So why BentoBox? On-chain gas optimizations, composability, automated yield strategies, right? Automated yield strategies are, as I mentioned, right, BentoBox is kind of like a dApp. Any balance that you hold within this dApp can automatically accrue yield through different strategies. BentoBox is composable, right? You can borrow, lend in on any mini dApp, right, in BentoBox, and withdraw those tokens and send them to other protocols to be able to stack your yield and optimize. And there's a lot of on-chain gas optimizations, which is pretty interesting because the larger topic of this year is how do we move to L2? And moving to L2 is like how do we optimize some of the transactions on Ethereum to basically move it to a different, more optimized chain. And BentoBox is a different paradigm shift where it's like, instead of going to a different chain, how about we just all go to a specific contract instead? And this is one way to save gas fees. So Sushi is expanding aggressively across these fronts on BentoBox and also L2 considerations. And because this is a big topic for our users, right? They want faster transaction times, they want lower fees. So let's walk through an example of taking a leverage position in the DeFi space, right? You'll have to enable the dApp, you have to approve the token, supply the asset, enable the asset as collateral, then borrow the asset, swap the asset for collateral, add the collateral, borrow the asset and swap the asset again. And this probably gives you 1.2x leverage. And this probably costs 9 transactions and minimum $500 in gas fees, because you have to do all of these manually, and you have to wait for each transaction to resolve. Probably your entire wait time to resolve all these transactions is like around 30 minutes and $500 in gas. So this is actually a very, very steep entry point for people who are looking for decentralized ways to leverage. And as I mentioned, right, the demand for leverage in like a bull market and a long bias is enormous, right? So it's difficult for people to actually acquire that leverage, right, if they have to pay $500 in gas. In Bento, all you have to do is approve the token once. So once you approve the token for Bento, it gets approved for every mini dApp within Bento. And then we can use something called the cook function to do 1.2x leverage, and that's 2 transactions and probably around $50 in fees. So much lower entry point, allows people to experiment with leverage. And as Anthony mentioned, DeFi is all about experimentation. That's how actually I got involved in this space, just trying things out. And it's basically our prerogative to try to lower fees aggressively so people can experiment more, right? Because you can't, no one's experimenting with, $500 in gas. And some of these mechanisms, are, very interesting for not only, retail investors, but also institutional investors. And it's all about like reducing the friction of blockchain, right? So how do we do this? Right, so let's kind of like review basically the mechanics of a short trade. You guys have probably reviewed this in earlier settings, but essentially, you for any lending platform, you have to add collateral and then you have to borrow. And so, let's say, for example, at time 0, we have to add $100 as collateral. We can borrow 50, and so our borrow limit that's used is around 50% now. If we are approaching 100%, we immediately get liquidated, right? And our collateral is seized, right? So we can add $100, borrow $50, and then we swap that asset back into the collateral for 50. And then we just hold. So once time 1 passes around, let's say the prices of the asset change, but the prices of the collateral are stable, right? What essentially happens is that, you have to swap $50 of the collateral back for the asset, but you're left with this, but since the asset price has dropped, you only have to repay $30, right? So the profit is your $20, the amount that you don't actually have to pay back, right? This is your gain. And this is actually the mechanics of a short trade, right? If you want to short BTC, you're betting on the fact that as BTC goes down, you can make a profit from it. So this is a very simplistic methodology of how a short trade works, and leverage is essentially repeating these steps over and over again, right? So there are 3 steps, right? You add collateral, you borrow the asset, you swap the collateral, and then you can re-add that collateral, borrow more of that asset, and swap. And every time you do that, your total system, the system limit used will increase definitely. And leverage is basically allowing you to repeat these mechanisms over and over again until you reach a limit that you feel is like safe, right? So some people like to go all in, right? And they're pressing up against that 90% limit, right? And that's dangerous because if there's any movement in the price, right? Even a small movement can, if the asset actually, the price went up as opposed to down, what ends up happening is you're at risk for liquidation, right? Because the total amount that you've added as collateral is not enough to cover the amount that you've borrowed. So that's the basic mechanic of a short trade, right? And in a couple slides before, we kind of describe how do we combine all these transactions, roll all these transactions into one to make it like very convenient. This is actually the power of the cook function. So the cook function is in Bento Box and allows for complex UIs and rolling complex actions actually into one transaction. You can do this all from the front end side, right? You don't actually need to do any of these transaction compositions on the Solidity side of things. So this actually opens up a ton of opportunities to build like very complex UIs. So in Bento Box, we basically in the contract, we have certain contract calls that are coded, right? So like the action to add an asset is 1, action to repay is 2, right, et cetera, et cetera. And, as a short overview, right, this is essentially what the short mechanism that we just described is doing. So instead of doing all those transactions manually, right, where we had to do like 9 transactions to gain 1.2x leverage, we only need 2 essentially. So the first mechanism is, the approved token. You need that wherever. And once you approve the token, you can actually start shorting. And so, if you're familiar with JavaScript, all the cook function is doing is taking, a composition of JavaScript arrays, and it's passing it on to the cook function in the contract, and the contract executes as like one transaction. So this is very, very, very powerful stuff because you can start to build, very interesting things using the cook function. And I'll go into examples. Like one thing, you guys can, kind of think about and try to build as well on top of BentoBox and Kashi. So this is a quick example, right? If you're familiar with JavaScript, it's basically just chaining these arrays into these contract calls, and this allows for a much more simplistic UI, right? So you can have someone do all the actions above in essentially one click, and that'll be much more optimized. So I guess Kashi has the element of being an isolated lending market, and so this is actually quite different than different lending markets. So isolated lending markets means that, well, the first thing is that you can create any market that you want, right? So a lending market always comprises of a collateral and then an asset. And so borrowers go borrow the asset, lenders supply that asset, and then borrowers have to put up some collateral, right? So for the different DeFi protocols, they're not isolated, meaning that you can go into Compound, for example, and you can supply an asset, you can add it as a collateral, and then you can borrow any asset. But the problem with that is that you don't actually as a supplier, right, or as someone who's lending out WBTC to Compound, you don't actually know what the composition of the counterparty collateral always is, right? So if Compound votes to add a token and the token has some sort of rug function, right, or has some sort of liability that allows that token team to mint a ton of those tokens, then as a lender on Compound, you're actually exposed to some risk, right? So if there were some GraphQL graph chart that basically showed you the estimated composition of your collateral, counterparty collateral, or what you would start to see is that, okay, you loaned out WBTC, maybe 50% of that is Ethereum as collateral, which is good, right? Ethereum is a pretty stable token, right? Another 20% is USDT, another 10% is USDC, and then there's actually another 30% that's actually this new token, right? That's comprising of your collateral. And if the token price falls, those people who have put up that collateral get liquidated, but you're essentially stuck holding the bag because you also end up with essentially a worthless token that doesn't really count as true collateral, right? So isolated lending is a little more safer, right? Because the asset suppliers always know what collaterals do. You don't have to supply assets into a market if you feel the underlying collateral from the counterparty is, not safe for your risk preference. So another power of Kashi and BentoBox is that anyone can create any market using any oracle, right? So this is quite interesting because we'll start to see lots of different combinations of different markets. And you can use the Chainlink oracles, you can use the SushiSwap AMM TWAP oracles, you can use a pegged oracle if you want, etc. And you can just generate all these lending markets. And so as I was saying earlier, right, there's opportunities to build things, right, on BentoBox and Kashi using the cook function that I just briefly went over. So let's say you want to, since BentoBox and Kashi are isolated lending pairs, let's say you want more of a Compound-like experience where you just supply USDC and it goes to all the markets, right? So you want to lend USDC to all Kashi markets, and let's say you want to make a rule that you want to weight by utilization or APR, right? So you want to just click one button, lend out your USDC that's in BentoBox to Kashi, and it'll be weighted by, let's say WBTC USDC is high utilization pair with a good APR, let's say a double-digit APR. So you want more allocation for that, etc. So you can use the cook function to construct basically multiple deposit transactions in one click. And the interesting thing is then you can actually create another function, right, that can rebalance, right, in one click. So every week you can go and rebalance your USDC across all Kashi markets. And this can all be done, quite frankly, from the front end, right? This doesn't require any solidity, right? This is all just contract calls. And this is why we've built BentoBox and Kashi in this way, to be accessible and also to allow people to build, lots of complex UIs, right? This is just one idea, right, that someone could build, like a very simple tool that just gives people a more compound-like experience. I just want to supply USDC and let the algorithm figure out like where my USDC should go in these caching markets. And then I want to rebalance weekly. And then finally, we're going to take a step back and go back to token creation. I know, Encode has been talking about, how do you create a token, how do you start a project, etc. And arguably, I think, Sushi will be the best place to do that, because we're coming out with a token launchpad named Miso. And, with Onsen, with token discovery and token incentivization, we can start to really see the end-to-end supply chain for all these tokens. And so Token Launchpad Miso is a place for creation, discovery, incentivization. You can launch, if you use what we call the recipes in Miso, you can basically guarantee users through, smart contract validation that, your token is not ruggable, right? So this can lead to increased trust, right? You can set whatever parameters you want. You can also have enhanced whitelists for different participants to, if you need to KYC participants, or you need accredited participants, right? Miso can handle all of that as well. So this really completes, Sushi's, horizontal scale for, this token ecosystem. And so basically, we want Sushi to be the best place to start your project, the best place to find new projects, and the best place to provide liquidity to projects, and the best place to swap leverage long or short projects. And, as I said, we do this in a completely decentralized way. If you enter for the first time, it might seem chaotic, but I would say the chaos is actually the beauty of decentralization. Yes, things are chaotic, but also, yes, things are getting done. And sometimes it's easier to take a step back and kind of see what Sushi is all about, to kind of understand what's going on. Because if you're too focused on any specific product or any specific feature, right, it'll seem very chaotic to you. So I hope, I hope this presentation kind of organized Sushi in kind of a comprehensive manner for you guys, and kind of can show you guys where you guys can start contributing, how you can start contributing, and I'm happy to answer any questions, right, any details regarding that. And thank you.
Awesome. What a fantastic presentation. Thank you very much, Omakase. I'm gonna, because we're slightly behind schedule, I'm gonna leave questions to the end. So I think a combination of, if you want to answer any questions in chat, maybe directly, and then we'll also hang around for 20 minutes or so. We can also do questions at the end, but that was really fantastic. Thank you so much.
No problem. Happy to answer. Thanks, guys.
Awesome. So stick around for questions at the end. I'm now going to hand over to Vega to give their presentation. So over to you guys.
Oh, yeah, thanks for that. Yeah, it's very interesting, actually. Enjoyed that presentation a lot. I'm going to jump into something a little bit more practical, where I kind of show how to get up and running with building applications on top of Vega, if you like. So I'm just going to kick off first of all with a short presentation, which I used for the previous workshop that we did for this series. So I'll skip over the bit about the challenges, but just a quick intro to Vega as a protocol, to give you an idea of what it is that the team have been building first, before we jump into kind of the practical exercise. So Vega is a custom built chain, which leverages Tendermint for consensus, that has been developed in a way to optimize for high performance trading of derivatives on a decentralized network. So this perhaps builds quite nicely on some of the things we talked about in the previous Sushi presentation just now, where we were kind of talking about Ethereum and some of the inefficiencies there. The idea with Vega is that because the chain is not general purpose, but specifically built to deal with the trading of derivatives, then a whole bunch of challenges that exist on general purpose chains can be solved for in a very specific way. And so the chain itself uses around a 1 second block time, can process sort of several thousand transactions per second. It does really good stuff like dynamic calculations of margin requirements on every block. And these are things that you simply couldn't do with a general purpose chain like Ethereum. And that leads to some quite significant limitations on Ethereum when trying to build these complex applications, like the fact that you can't offer people competitive leverage and margin requirements that they might otherwise get on a centralized exchange. And so the design pattern is really intended to kind of solve some of those challenges in order to build a protocol and a network that's decentralized, where people can trade pseudonymously, where assets are held in a kind of essentially non-custodial manner, so by a smart contract, and where the performance is still comparable and competitive with centralized alternatives. And obviously then through doing that, hopefully makes it possible to move a significant amount of volume that currently trades elsewhere on centralized exchanges, kind of on chain, directly kind of transacting on the Vega blockchain. And then one key point is it's intended to kind of be composable with other chains. And initially we've built a bridge to Ethereum. So the assets that are used to trade on Vega live on that kind of main chain, if you like. And so you can have markets that use basically any approved asset from Ethereum, or so ETH or WBTC, ERC20s, as the collateral asset, and we'll see this in the demo, as the collateral asset for trading on Vega. So Vega's dealing with essentially, the creation of the markets, the management of the margin requirements on those markets, the accounting of the P&L of the traders, and then the assets live initially on Ethereum. And when somebody wants to withdraw balance from Vega, actually what's going on is, based on however much profit and loss they've made since they deposited, their balance has changed on Vega, and then that's approved for withdrawal on Ethereum. And we can bridge to other chains as well, and there are plans to do that down the road. So Vega's really optimized for solving this challenge of creating an environment that can enable trading that's consistent with the experience you get on a centralized marketplace. And so I'll skip past the challenges because that was for the last presentation, and just go straight to developer resources. So here we've just got a quick overview of where you can get more information, and you'll see some of this in a minute, but some more information about building on Vega and the kinds of applications and interfaces that you might want to build. You can come and talk to us about on Discord, or check out the forum at community.vega.xyz. And then the docs are hosted here, docs.testnet. I'll jump into that when I get into kind of just showing how we might build something really simple in a minute. So you'll see the docs then. And then just a small point here about the kinds of APIs we have. So it's a decentralized network, proof of stake network, basically running a bunch of validator nodes. And then there are API nodes which are used to submit transactions to those validators, and also to query information about markets and stuff like that. And those API nodes expose really kind of user-friendly interfaces. So you've got REST, gRPC, GraphQL, which allows you to either trade via the APIs or get data out for building, let's say, kind of like dashboards and stuff like that. And that's kind of it there. That's, I think, our Twitter. So that's kind of the overview. And I'm going to just jump into now showing you how you would initially get set up with building stuff. So I've got a few things I've already downloaded, but I'll show you them. I'll show you where you get them from as we go. Now, because Vega is obviously an independent chain, then much like on Ethereum or Bitcoin, you need a wallet with a private key. That's the same with Vega. So we have a wallet CLI tool, which you can download from GitHub. I'll show you the repo in a minute. I've already downloaded it. And this basically manages your private keys. So if I just show you, this is already kind of installed, but you can see the kinds of things you can do. So I can list my key pairs here. So Vega wallet list. What do I need to do? Okay, put in the passphrase. Sorry, I had something in the way I couldn't see. I'm not sure why it's not working with that. List minus n my key. Oh, there we go. Oh. There we go. So obviously you wouldn't normally reveal this, but I've only got one key in here, which I've already created. And there's a private key. I mean, this is just testnet, so it doesn't matter, but there's my private key and public key. And this public key is what all of the balances and trading activity is attached to on Vega. So using this wallet service, I can actually run this locally, and this is going to open up the Vega console. I'll show you it in Firefox because it works a little bit better. This is going to open up the Vega console, which you can also get to, I think, testnet.vega.trading. But when you run a local wallet, it basically opens it up like this for you in a browser as well. And now I'm showing you this because it's kind of important, right? You should run a local wallet if possible, especially if building on Vega, because so there is a hosted wallet here. You can use a Vega hosted wallet, which we've set up for convenience, but it obviously means someone else has your private key. And like any blockchain, you wouldn't do that, much like you wouldn't do it on Bitcoin. You wouldn't really want to do that on Vega. So running this local wallet like I'm doing means that this private key here is only ever on my PC, and obviously you should back that up in the same way you would elsewhere. I mean, it's subtly different because on Vega, obviously, if somebody gets your private key, they can just like decimate your balances by trading on your behalf, or maybe they know what they're doing, and you'll find there's some profit there. But regardless, it's still a sensitive piece of information. And so when this opens up, we can connect to the local wallet. I will use the same key that I just showed you, so my key and then the password. Don't save. And when I connect, you can actually see the public key here, and you can see I've got some test DAI. Now that's something that I just did earlier in preparation for this, which I'll show you in a minute, how you can deposit, because it kind of shows how the bridge to Ethereum works and how the assets are on Ethereum, but the balance is shown here. But just before we get to that, just like a little kind of overview of the console. So console is, kind of a normal sort of trading interface with a limit order book, charts for different markets, and then you can see there's all sorts of different markets here. So these are just test markets right now, and we've got some bots that are running on here, making them look real and kind of tracking the real price, so that they're using the APIs. But what's kind of interesting is all the different types of data you can see about the markets in terms of, like, here, you've got stuff like open interest, which might be familiar, insurance pool balance, and these are all things that you get right now with kind of centralized exchanges who offer, you know, these kinds of derivative markets with really competitive margin requirements. And this kind of builds a bit on what was seen in the previous presentation, where we talked about leverage. You know, obviously, if you go to a centralized exchange, you can trade Bitcoin with like 100x leverage, right? Where if you want to trade $1 million position, then you actually only need technically to have $10,000. Now, obviously, that's extremely risky, but nonetheless, it's possible. And it's possible because Bitcoin's extremely liquid. And you might think, well, that's centralized. And then in terms of on decentralized applications, you know, I can't do that. Maybe I can only get like, a very small amount of leverage. Like maybe I can get 2x instead of 100x for the same market. And it sort of doesn't make sense. And that's simply because those protocols are built on chains that aren't technically capable of doing the things you need to do to offer the really low margin requirements that centralized exchanges can. And that's some of this stuff around insurance pools and how you calculate margin requirements, how you close people out of their positions in an efficient way. And you have all of that information here because Vega does all of that within its own chain. It's kind of key to highlight that. And there's all sorts of interesting things you can build on top of this that expose information about markets that currently only the centralized exchanges have. Once you make it open on a public blockchain, we're kind of really excited about the sorts of things that we can build in terms of dashboards that expose information about, you know, what people are doing on there. So yeah, because it's a public blockchain, the profit and loss of traders is publicly verifiable. Now, of course, you don't know who they are because it's just literally a party, and we'll look at that in the docs, but it's just a public key. But nonetheless, there's information there that currently isn't known to the public, and centralized exchanges have kind of there's an information asymmetry there in markets at the moment. So this is just kind of the terminal, and I can do stuff in here. Like because I have some DAI, I can go and buy just like one contract of Aave DAI. And just to show you what the performance is like, that's already confirmed. And I now have a position down here with open volume of 1, and you can see my profit and loss changing as the market moves up and down. So it barely feels like a decentralized network, but nonetheless, there is a blockchain behind this. And I will probably, what I'll do now, I think, is I'm just going to show you how to deposit, talk a bit about the bridge and what's going on there. So because I need MetaMask for that, I actually need to be in Chrome. So let's flip back to Chrome. And we'll do my key. So there are different assets on here that other than just test DAI, and that's because there are different markets which settle in different assets. So you got TUSD, or well, let's just call them USDC, DAI, BTC, Euro. We'll just deposit another one of those. So if I go to deposit, you get all the assets that I don't have a balance of. There's some test stuff here, which don't worry about that. But so let's just deposit. Let's just get some test BTC. And this is looking at my Ropsten, or it will be. It's not unlocked. This is just looking at my Ropsten wallet here with some test ETH in. which we can view on Etherscan, and we can see it doesn't have any tokens in it. It only has some ROPs and ETH. And so I'm just going to go and try to deposit some of this. It's going to tell me I don't have any, so I can't deposit anything. But there's a helpful faucet that we've got in the console here, so which you can click to get some test BTC, and this will take a few minutes. So I'll just talk about what's going on whilst it's running. And what this is doing is this is just calling our faucet contract, which so you can see the pending transaction base faucet, which is just going to deposit some test BTC into my Robson wallet here. So when that confirms, I'll show you. I think it might have confirmed already. Yeah, it did. So we can just look at this transaction. We can see it's just sent 10 test BTC to this wallet, which is my Robson one. And now you can see I've got a token. So now I've got that in my wallet that's linked to MetaMask. I can deposit this to Vega. So I'll click use maximum here, and I'll deposit all of it. And I'll show you what's going on with that as well. So first of all, I have to approve the Vega Ethereum contract to deposit from my wallet. This is like a standard workflow, which if you've done any DeFi stuff, you'll be familiar with. So once that approval goes through, I can then do the deposit. So that's done. So I'll now do a second transaction to deposit that. And you can see here it says waiting for 5 more blocks. So this is actually similar to how centralized exchanges work. We need to wait for a certain amount of block confirmations before we can be confident that we can credit that that balance to the to your Vega public key, which is this one here, 1A9, on the Vega blockchain. So I can just show you this transaction, because this one's a bit more interesting actually. So it's already confirmed, but it's only got 2 block confirmations, and so now it's waiting for 4 blocks. So it's waits for 6, and we can look at what's happened. So if we just go back to my wallet, which had 10 tokens in, it doesn't have them anymore, so they're gone, and it sent them to this address, 3867. And this is a smart contract, which is basically an asset pool, and this pools all of the assets for everybody who deposits onto the Vega network. So if we look at the balances here, you can just see there's a bunch of TBTC, there's a bunch of DAI, Euro, USDC, and these vote tokens, which are for governance. And you know, the smart contract knows who those assets belong to, sorry, the Vega chain knows how much of those assets you have left, should I say. This smart contract has no awareness of how much still belongs to you. And the Vega chain is so the validators on the Vega network are the only people that can withdraw from this smart contract. So once essentially a quorum of validators agree that an amount should be withdrawn from here, then you're able to withdraw the assets that you deposit. So if you deposit to here and then you never trade on Vega, and then you know your Vega balance, so this is now done. So if I actually go back and I go to withdraw, if I want to withdraw, I have, you know, still have 10 BTC available to withdraw. So this is coming from the Vega blockchain, which knows based on the trading activity, I still have 10 TBTC left. And that's why it's the Vega validators which can submit withdrawal requests to the ERC20 asset pool. And so just that should give you kind of a good view of what's going on with the bridge. And now I've got a balance here. So now I have that. I can trade markets that are settled in BTC as well. So I could trade this ETH BTC market if I wanted to. Let's click on the tab there. So I can now go and just do one contract of this. And something else that's going to be interesting to look at is what's going on with the margin that's being used for the open position. So up here, we can see my collateral, and you can see how much is available is now actually less than the 10. And I've got a very small amount deployed to margin for my trade. And you can see this is kind of changing. And this is the dynamic margin calculations, which are happening on every block. And so the amount of margin that the network needs depends on things related to, the P&L of your position, the liquidity of the market, the price of the asset, and that's designed to basically optimize for using the minimum amount of collateral that's needed to run the network safely. And so that's kind of an overview of how you trade via the UI. The next thing to look at is how we might actually build an application that does this using the APIs. So in order to do that, I'll show you the docs. So these are quite extensive, and obviously if you're going to be building anything, I encourage you to spend your own time digging into all the nooks and crannies on here, because you're going to see this is probably where you'll find inspiration for the sort of data that you can get out, which should give you ideas of things to build. But I'll just give like a very quick overview of a couple of interesting things so you know where to look. So we've got, this is going to show you the different APIs. So gRPC, REST, GraphQL. There's some how-to guides here, which give you all sorts of different things. So like submitting an order, canceling orders, market creation. So you can create so markets are proposed by anybody, and they need to be voted on using the governance tokens. So there's all sorts of information about that. There's a section on streaming, which is going to explain how you get real-time data out from the API nodes. So you can do that via WebSockets to build really kind of high-performance applications over GraphQL. And then we'll perhaps dig into just looking at the REST API in a bit more detail. So you've got like a full detail here about all the different endpoints, and I'll just show you a couple to explain, so you can see what's going on with the public keys and how the trading data is linked to that. So, but first, actually, let's look at markets. So get a list of markets is unsurprisingly /markets, and I think testnet, I've been there before. Yeah. So you can just, it's like using any other API where you can just query a market and you can see lots of information about that market. So don't need to go into all of this now, but there's loads of stuff here to learn about, because actually operating proper derivatives markets is really complicated, and yeah, it's just too much for the scope of this this presentation. But there's stuff here around margin calculations, risk models, how the fees are set, things like price monitoring. So this is used for protective auctions, which essentially mechanisms for preventing sorts of market abuse that are sometimes seen. So you might have heard of circuit breakers on exchanges like the NASDAQ and the New York Stock Exchange will halt trading if the price declines by 7% in one trading window, and we saw that with COVID when markets were crashing. So that's what this is doing. And so there's lots of sophisticated stuff here around that's specific to the Vega chain and how it deals with derivatives and operating safe, efficient markets. But you might be interested to look at that in your own time. And then we can look at information about a party. So let's have a look at parties, because that's where it gets interesting. So slash deposit slash party ID. Okay. Slash. I just need to grab my party ID, which was here. So we'll look at me. And you could do this for any party. And I think we can even query the parties. So I'm going to try and find that one. I don't know them all off the top of my head. Get a list of parties. I guess it's slash parties, but yeah. So here you can see the deposits that I've done. Or you can look at, and you could look at this for any of these parties here. So we don't know who they are, but these are just people who are trading on Vega. And we can just grab a random one and see what they're doing. So this, you can see all the information about when this particular party is deposited. And this is really, this could be really powerful in terms of building dashboards, especially when you start thinking, okay, well, maybe I don't want to look at their deposits, but I want to look at what trading are they doing. So you can go parties slash party. Sorry, what was it? Parties slash party ID. Slash trades, and you can see all of the trades that they've done on different markets. And you know, this makes me think of some of these kind of gimmicky applications where it's like copy the person who's most profitable. And you know, here you could just be looking at these parties and thinking, so who's making money on what market, right? And maybe I want to do what they're doing. You can't do that today. But then how does that change markets, and how does that impact how assets are priced if everybody knows what everyone's doing? It's kind of opens a world of possibilities. But that should give you an idea of some of the how this is working and how you can get stuff out of the APIs. That was the REST API. I want to show you a quick thing about GraphQL, which is handy to look at as well. You have the reference docs here, which give you all the details about the schemas. So if we go into query, you can see, okay, I want to query markets. So I can query markets, I can query parties. And this is useful for getting real-time data out or building more flexible queries. And then we have this playground, which, yeah, okay, that works. So here it's just grabbing a market, and let's see, what one was that? That's Ave Die with that market ID. So it's grabbing a market and it's filtering on market ID. And you can test your GraphQL queries in here based on all this data. So this will give you all the detail that you would need to do that. And then you can do, other than queries, you can also do subscriptions. So this is how you would get data out of real-time data over WebSockets. If you're familiar with that, you would do that using the subscription part. So I won't dig too much into that. There's loads and loads of documentation which you can look at if you want to start building things. But I thought what would be cool now is just to show how in, I think, so I've got it here. I'm not going to use that one, trade2.py, because, oh, sorry, I'm not going to use that one because that's the complete example. But it's got 50 lines of Python. So what I thought would be cool is to just walk through an example, and we'll rebuild this line by line. How you might build an application that trades on Vega. And it doesn't do anything useful, but it's going to use the local wallet that I've got, which I showed you, and it's going to use the collateral that we've got in there, and it's just going to fire random trades via the API, and so we'll take this like one line at a time, and we'll basically rebuild the function. So, and we'll talk about what it's doing. So let me just save this. So we're going to have in our main section, we're going to have a while loop, which calls a trade function, and it sleeps for 1 second, and then it calls the trade function again. So we should build that trade function, and I'm just going to copy from here just to speed things up one at a time, and talk about what it's doing. And so in the trade function, we're going to create a random number between 0 and 1. If it's greater than 0.5, we're going to buy, and if it's less than 0.5, we're going to sell. We're going to create a random size between 1 and 5, so we're just going to buy a random amount or sell a random amount. We're going to call this function called getToken, which I'll talk about a bit more in a minute. This is how we are authenticating using the local wallet. We're going to prepare an order to either buy or sell of the random size. And then once we've got this prepared order, we're going to sign and send this to the Vega blockchain. And then we're going to get, if we get back a status of 200, then it was successful. If not, we'll print the error. And there could be a bunch of reasons why you get an error. For example, you don't have enough collateral in your account. Maybe the market is not in a state that's accepting orders right now. So if it's in an auction, certain orders won't be valid and things like that. But for this demo, it should just work, and it's just going to say that it executed the order. I'm going to comment these out because we actually don't want to log those. And then we need to add these other functions that are missing. So get token, prepare order, and sign and send. So let's go first with get token, and look at what that's doing. So get token is going to use the Python library requests. Let me just bring this stuff in from the top, actually. So that's there. So we've just got some global variables here which are used for trading. So inside get token, what we're going to do is we're going to pass the wallet name and the wallet passphrase, which is my key, and password 123, which you saw before when we set up the local wallet. And we're going to send a post request to the wallet server, which is localhost, and it's running on port 1789. So that is that's this here. So you can see when I actually started the wallet service, it opened. You get all these API endpoints, and we're going to be using /auth/token, which is here, to log in. And this returns us a token. So what this does is it says, give me a token because I know the password to decrypt the private key that's held in this Vega wallet. And so I explained before that we have a hosted wallet. That's basically all the hosted wallet is doing, is we've just taken this wallet service and we've stuck it on a remote server so that we can create identities in there for people. So my identity is my key. Obviously, that means all of the private keys are in one place. So that's why I say people shouldn't really use that. But if they just want to play around on testnet, it's fine. So once we do that, we get our token. So that's fine. So that's just the get token function. And then we need to, we'll use that token later when we do the sign and send. But for now, let's look at prepare order. And I'll copy it over into our file, to our new one. And prepare order just takes the size and the side. And it doesn't really do anything fancy. It just builds the request that the REST API requires in order to submit this order onto the Vega blockchain. And it's going to use the market ID, which I've got up here, hard-coded, which is the market ID for Aave Dai. And it's going to use the party ID here, which is the one that we deposited the balances to earlier. So yeah, once it does that, it just hits orders, prepare, submit, sends a post request. It's using a different URL, so it's not using wallet server. It's using the node URL because it's actually being submitted to the API node. for testnet. So it's actually hitting LB, so it's hitting a load balancer, and then behind there you have the nodes on the network. And this is something we set up. In a distributed network, you would just grab the URL for any of the nodes. It doesn't matter which one you want to which one you send it to. In fact, in the docs, there's some information about the nodes. So here we're running these nodes at the moment. So we've got 4 nodes on testnet, and yeah, this is the load balancer. So jumping back to the code, once we prepare the order, this is actually just going to take this and it's going to marshal it into a kind of like a because the Vega blockchain uses like protobuffer objects. This is just using the node to generate like a base 64 encoded string that we can then sign and submit to the network. So once we call prepare order, we then need to do sign and send. And I think that's it. So we'll just paste this here and look at what that's doing. And that takes the prepared order, and it takes the token that we got earlier when we logged in to the local server. And this token is used to basically sign this prepared order before submitting that to the Vega blockchain. And then what the chain is able to do is verify the signature, and it understands, okay, you do possess the private key for this public key, which has these balances here. Yeah, so this is just building the necessary requests, and then it's actually using the local wallet server with propagate true, and this just means that when we send this to the wallet server to do the signing, it's then just going to automatically propagate that onto the Vega testnet node. And you don't need to do this, but if you don't, then you'd need to then submit the signed transaction. And putting all of that together, I think that's everything. We can probably run this script. So I've copied it all over from here, so it should work because this is tested, but never can be too sure. So let's see. And I'm going to just put some print statements in different places to show you what's going on. So I'll exit the script here first of all. So we're going to run, let's just do this. Okay, so we're going to run Python. We're going to run, sorry, not Python. We're going to run trade2, and what it'll do, because I've put an exit here, it's not actually going to loop. It's just going to come in, call the trade function once, get a token, and then it's going to exit. So let's actually print the side and the size, and we'll move this to just show you the different steps. But so trade2, cool. So that's the token, and it's going to sell 3, and obviously each time it'll do something else. So sell 1, buy 4. So that's working. And then after it does that, it prepares the order. So let's have a look at what the prepared order looks like. And this is the prepared order. So as I said before, you get this base 64 encoded blob, which is required to submit the transaction to the blockchain. So it's a bit boring, but this is basically what we're going to sign in a minute. So that seems to be working okay. And then the next thing to do is basically just look at the response we get back when we submit a trade. So we can do that as well. We'll just exit after that so it doesn't fire loads of trades. And the thing to look at here as well would be what position we currently have on Aave DAI, because that's going to change. So we're just +1, so we have one contract long on Aave DAI. So let's see what happens. So we just get 200. I should have done something else actually. I should have done response.content. So that's the full response. And it's not that helpful actually because it's base64 encoded. So, but we see that we get a response back, and because we get 200, in fact, I didn't check that, did I? But I'm pretty sure we did get 200. Yeah, because we get 200, we know that it was successful. So if I go and look at the console now, yeah, so now I'm 7 contracts long. And we can just modify this just to see what's going on here, actually. Let's just take out the token because the token's massive. And we'll just print the side and the size. So we get sell 4. And so if we go back, we should be long 3. Yeah, so we have +3. And now if I just take out the this exit, and I'll take that out because that's not really necessary. And I'll just leave the side and size. We can just run this, and it's just going to keep doing random orders. We already have a log. Let's comment that out because this one's cleaner. It's just going to do random trades, and I'll pull up this at the same time. So you can see, if you look down here, that the volume is just changing from positive to negative as we randomly go long and short on this market. It's not useful at all, but it shows you how you might build something that both gets data out from Vega and also trades on there. I think that's it. I mean, it's 50 lines of Python. It's not that complicated, and it's on our, I think this example's on our GitHub. Oh, that was one final thing that I wanted to show you. So let me just show you that quickly before we wrap up. So then, if you just go to github.com/Vega protocol. Cool, I'm not logged in. I thought I might be logged in, and you'll see the private repos. So some repos are private, but we very much want to make sure, you know, eventually everything will be open source. Some things are private because they're still work in progress. But the idea, I think that when I'm logged in, there's like 70 repositories, so approximately half of them are public already. This Go wallet is the one that you would go to download that wallet that I showed you at the start. And you just go to releases, and you can download Linux, Windows, or Mac. So we've got all the different OSs there. And there is a repository with these scripts in as well called Encode Dev Workshop. So if you wanted to have a look at what I've just shown you, here's the script online. And yeah, I think that probably covers everything.
Awesome. Thank you very much.
Should I just have a look at the chat? Or
I think we're actually
okay.
Everything got covered.
Cool. Okay. I can stop sharing. I've taken it.
Omakase has done a very good job at answering the questions that came up in chat. So very nicely done. Are there any final questions from anyone? I realize we luckily, in a good way, went over time, but I'm conscious of time as well. So are there any other questions anyone wants to ask at this stage? Good. So the next event is on Wednesday at 10 AM, which is really early, 10 AM London. It's with Kane Warwick of Synthetics. And that is an AMA, so come prepared with questions. And then after that, we have a on DeFi 2 with Aave and Chainlink who are joining us. And then we have, after that, an event with Nick Grossman, who's a partner at Eden Square Ventures, one of the biggest VCs in general in the world. And then a couple of other things we've got planned: a getting hiring event, and hopefully also an AMA with one of the main guys at Sushi, 0x Maki. So in the meanwhile, thank you all for joining. Do ask any questions on Discord. Thank you very much to our speakers, to Omakase, and to I'm not sure if I actually can say the Vega speaker's name, so Mr. Vega also in this context. And thank you all for joining, and see you all soon. Thank you very much.
Thanks, everyone.
Cheers. Thank you.
Cheers, guys.